Namaskar, friends. Welcome to the second lecture on the fundamentals of finance. And this lecture is slightly serious. It is something which is fundamental, something which is basic, and it is going to deal with data. Accounting basically is nothing else but analysis of data, tabulation of data, and it is based upon this accounting that the decisions concerning the finances are being taken. For the purpose of clearer understanding, I divide this data into two parts. The first is the data which collects information of what has happened in the past. If a transaction has taken place, you must have bought, sold, transferred, entered into various financial transactions in the past. Moment the transactions have taken place, you record it. Once you record it, you classify it. Once you classify it, you tabulate it. Once you tabulate it, you interpret it. And the end result of collection of this data culminates into two things. One is the balance sheet, and second is the profit and loss account. This entire process is called accounting, the financial accounting. And this information is extremely necessary in order to meet the compliance requirement, because your financial performance is viewed by the entire society. If you are a company, you will have to file it with the registrar of companies. If you have taken loan from the bank, the bankers will say that what has been your performance. Now you are not going to give him a long lecture. All that you have to hand over is the profit and loss account and the balance sheet. And he will be able to look at it and analyze for himself how good you have performed during the last year. So it is this profit and loss account and balance sheet which is the ultimate outcome of your financial performance. Even government, you have to submit your reports to the government. Any person who is going to do business with you would like to have a look at that how well you have been performing. So he will be asking for your financial results for past 2 or 3 years. And this accounting therefore deals with the past, the tabulation of what has happened in the past, ultimately culminating into balance sheet and profit and loss account. A third statement is added for the purpose of your final knowledge, and that is the cash flow. That how the movement of cash and funds have taken place. But the balance sheet and profit and loss account are the prime two documents. Cash flow is a derivative from that. This is the first aspect of accounting. And the second aspect is something which is very, very close to decision making. It is concerning the costing. That your product, how much did it actually cost? If you take a decision, what is going to be the impact of that decision on the future? If you are going to borrow money, how is it going to affect your financial performance in the coming days? How will your business look like in coming 4 or 5 years? Now, this is also data. This data is prepared based upon the first aspect which we talked about, the past. So you look at the past, look at the business environment, and try to project how things are going to look like if you take a particular decision, how things are going to look like if you continue like this for about 4 or 5 years, how the things will look like if you take a decision after 4 or 5 years. This information, or this particular, I would say, science, or I would say a particular discipline, is called management accounting. Because the outcome of this exercise is something which is dear and close to the management. It is not given to the bankers always. It is something which is not always given to the government. It is something which is not given to the shareholders, like the financial information, where you are called upon by the law to share that information. This information of management accounting is something which is dear and close to management. And it is this information that will help the management in taking the decisions which they want to take. And it is therefore a privy to the organization. It is the management accounting. And for business, mind you, it is the second type. The management accounting is something which is very important. If you want to thrive, if you want to prosper, if you want to grow, it is the management accounting that is going to help you. The costing is going to help you. But you will be able to develop a good management accounting provided you have got the first information, whether you know your past, right? If you know your past, if you analyze your past, then if you take your decisions, then your decisions will be more meaningful, your decisions will be more grounded. So your management accounting depends upon your financial accounting. In this lecture, we'll start with the first thing first. We will start first as to what is the drab, as people call it, routine, monotonous accounting, right? Whatever not so praiseworthy words which are being used for accounting, it is necessary. And something which is necessary and essential, like your morning exercise, is not something which people like, but you have to do it in order to be strong financially. Now, coming to financial accounting. As I said, that every transaction has to be recorded. The first assumption that you make, say for instance, just imagine yourself that you are writing account for a particular business, okay? And with that particular set of mind, I will take this lecture a little more forward. Say you're writing account for A Limited. And what is A Limited? It can be a partnership, need not necessarily be limited, business name called A Enterprise or whatever. That particular business is a separate business entity. It is a distinct entity which you create in your imagination. A business is a separate business entity from the owners, from the promoters. So when you start a business, it is all a clean slate, a plain piece of paper, right? And then the promoter will put in 100 rupees. So 100 rupees will come by way of an asset as cash in the hands of the management, and 100 rupees that business, because it's a separate entity, it will say that I owe to the promoters. It's a liability to the promoters. This particular process which takes place, right, is the process of accounting. And one basic statement which is being prepared out of it is the balance sheet. A balance sheet is nothing else but a snapshot decision as on a particular point of time, that as on 31st December 2017, what are the total assets which the company has, and as on 31st December 2070, what is the total liability of that particular business, as we say, an enterprise. If you look at it, and In this slide, I've tried to make it a little more clearer that there are two sides to the balance sheet. One is from where the sources have come, and on the second side, where these funds have been utilized. So one side is the source of fund and other side is the utilization of fund. The source of fund, since the business is a separate entity, started with a clean slate, all the sources are basically liabilities. Even if the shareholders have put in their own money, it is a liability which the business entity owes to the shareholder. The bankers have given some money. Some people have supplied you goods and said that I will take money after 31st December. So it's a liability. Some amount have become due and you have not been able to pay. Say for instance, your electricity bill on 31st December, you didn't even receive the bill, but you know that how much you have consumed. So that is your liability. So on one side, and it is also a source of fund because you have used the electricity, you have used the power, you have used the telephone services, you have used the services of people, and you are still to pay. So therefore, they have indirectly financed your business. It's a source of fund. It's a liability, and therefore, it is listed on the liability side. Now, all this money you have got, you received the bank loan, you received the shareholders' money, you received money from your suppliers. Where have you used this? So that will go on the asset side. On the asset side, you therefore have your plant and machinery, you have got your current assets, that means your inventory, your stock in trade, your certain monies which you have paid in advance that you can give me the goods later, but you keep this money in order to make sure that I receive the money. You have given certain monies by way of advance, you have given advance to your staff. These are the uses of funds. This is called the asset. Naturally, you cannot invest more than what you have got. You cannot use more than what you have got. And for all the uses, there is some source from which the money has come. And therefore, the total of your asset side and liability side is equal, is always equal. As you can see in this slide as well, that it is the same. This is regarding your balance sheet. On the other side, you have the profit and loss account. Now, what is this profit and loss account? The profit and loss account is a detail of what has been the income of your business during a year, okay, or during a period, say for 6 months or 1 year or maybe 1 month. What is your revenue? What is your income? That will be on one side, which is called the revenue side. And on the other side, out of your business, in order to earn that revenue, what have been the expenses which you had to incur, right? What is the cost of earning that revenue? When I sell a soap, then I'll have to incur all type of expenses, and it will be raw material, it will be wages, it will be repairs and maintenance, it will be traveling expense also, marketing expense. These are the expenses which I had to incur in order to earn the revenue. The revenue is from the operations. Revenue can also come by way of excess fund you have invested in bank, so you receive interest. You might receive some gift also during the year. That this is so that is also a part of your revenue, because the gift has come as a part of your business dealing. There's someone. So these are your revenues, and on the other side you have got the expenses. If your revenues luckily are more than your expenses, you have a profit. And if your expenses are more than your revenue, you land into loss. So what do you do with this profit and loss which comes out of your profit and loss account or profit and loss statement? This profit and loss, or profit or loss, in fact the right word should be profit or loss. This profit or loss, who is going to bear? Naturally the shareholders. So if there is a profit, the shareholders funds goes up. You transfer from profit and loss account to your balance sheet and add it as a reserve. Because ultimately the profit belongs to the shareholders. And if there is a loss, you transfer it and reduce it from the shareholders' funds. So either you can reduce from shareholders' fund on the liability side, or you can show it separate by way of an asset. It's the use of fund. Right? So these are the two basic statements which are coming out of your financial accounting. Friends, in business, there are thousands and thousands of transactions. It is easy to say it in 5 minutes or 10 minutes, right? But the transactions are many. The complexities are many. The parties with whom you are dealing are many. The persons to whom you are selling goods are hundreds, depending upon your size of business. The type of raw material you are purchasing are also different. The machineries you have got factories, the types of machinery. For all this, the data will have to be collected separately, and ultimately it will culminate into your profit and loss account and your balance sheet. The entire process of this accounting, the accounting mechanics and the fundamentals or the basic principles of accounting are given in separate chapter 2, 3 and 4, which will be of use to you. If you go through it, you will be able to understand what is the process of accounting which is take place. And thank God to technology, because of so many computer programs which are available. In earlier days, the accountants had to really sit down and note down all the transactions. Now on computer, this comes straight away. We'll talk about it in our next lecture as to what are the difficulties which an accountant faces and how different assumption even he has to make while recording the past transactions, and how this particular process of accounting is controlled, is monitored, so that people have the right information about the businesses all over. Thank you very much.